stocks deserve mention. Paytm is now up almost about 3% IRB Infra on the back of an order win is up almost about 3% as well. SpiceJet is up about 2.5%. A couple of banks are doing well. But let's look at the overall consumption piece. As we've been telling you, the rural tier 2 market has been under pressure, but luxury has been doing very well. Berger Paints reported a weak Q3, largely on the back of higher raw material costs, extended monsoons and short festive season. The company in their earlier interaction had guided for a demand and 200 basis points improvement in gross margins. To discuss more on this and demand trends, we're joined by Abhijit Roy, the Managing Director and Chief Executive Officer at Berger Paints. Abhijit, thanks a lot for joining in. First, on the demand situation, have things come back? Has there been any recovery at all? Because the rural market still seems to be struggling. Can you quantify it for us? In Q3, your domestic volume growth was a little over 6.5%. What do you think you can do by the end of Q4, and how will things shape up in FY24?
So the demand has revived, actually last year, as I had mentioned, in my previous interaction, Q3 had a very high base, and that's why the growth rates were limited in the Q3 of this year. However, Q4 is a normalized base, and therefore we expect double-digit volume growth and value growth in Q4. So if you look at the demand scenario, it seems to be fairly okay. Thankfully, the rural demand also, in our case, it's not rural actually, it's upcountry sort of. That demand has revived a bit in the month of February. So earlier, the urban centers were doing much better. But in February, it's the upcountry also, which is doing relatively better than what it was doing earlier.
So you said expect double-digit volume and value growth in Q4. Would you extrapolate that for FY24 as well? Any initial signs?
We don't commit on that, but yes, it looks like that, we should be able to do a double-digit volume value growth in 24 also.
Oh, that's good news then, Abhijit. If you're going to be growing at double digits, what's your market share? I think your first half of the year did improve by around 80 bips. 18.8% odd, if I get that number correct. Where do you see this number headed?
More towards 19.7 to 20%. That's what we are looking at. In terms of market share. Currently, we are standing at around 19.4, 19.5 actually. But
okay.
If you take the listed companies into account, but I think we should be able to cross the 20% mark hopefully next year.
Oh, that's an encouraging sign then. So market share improving to 20% will be good from an investor perspective. What about raw material cost? You were guiding that gross margins will gradually improve to the high 30s. Could you tell us where do you see this number headed? I think you were guiding for a number of around 37, 38% earlier. Do you think you're going to be getting there? And how are the costs panning out?
Yeah, so it will be around those points. Exact I can't say at this stage, but it will be around the 37, 38% in Q4 itself. And hopefully we'll be hovering around those points. Going forward as well.
Okay, all right. So I was reading a analyst note, and this is, the note points out, if I can quote this, they say that Berger reported strong revenue CAGR of 25% between FY21 and 25. Between 21 and 23, the CAGR revenue growth was 25%. However, they say that there will be negligible price hikes in FY24 and 25. So volume growth is likely to be weaker, along with revenue growth, which also will be under pressure because of competitive pressures, revival of unorganized, smaller players, and generally high inflation levels. I just wanted to comment with regards to this 25% number and what growth will be going forward. I mean, you said double digit, sure, but what can we expect?
So, we don't give such forward comments, but, I can assure you that, it will be in the double digits. That's what we are looking at. It can be 10%, 12%, 14%, whatever. Around that range. It will not be, of course, 25%. That's something which was there because of the COVID period, and hence you are seeing sort of a surge from the lower bases. That is not a sustainable thing, but we will be in the double digits and a comfortable double digit area.
So you said it could be, you gave us a range, could be anything between 12 to 14%. Is that the volume growth, and will this ability to take price increases, etc., Would you concur with it? That is generally going to be difficult at 24, 25 because of the factors mentioned?
So volume and value growth, going forward, unless the price increases happen and unless the raw materials misbehave, will be on similar grounds. As of now, the raw material prices are stable. So the volume value differential will go down. It will not be there anymore. So whatever we have, the volume growth, maybe incremental 0.5 to 1% of extra will be there in terms of value growth. So it will be very close to each other. So that's why I said that, the price increase led volume value gap won't be there. So, a part of the 24-25% was on account of the price increases that happened, which was about, 8 to 10% more, on an average basis, if you look at it. The increases have been over various periods of time. And then increases were about 18-19%. So, that is why that also resulted in a value growth, which may not hold. So, volume growth remained at around this year also at around that 10% level or 11%, 12% level, but the value growth had surged ahead because of the price differential. That will go away, and so the value gap will not be there anymore.
Just to kind of finish that loop, not to hold you down to any particular number, but it should be, so overall sort of value growth should be 14-15%, 24-25, I mean in that range, right?
So, we will try for that. It will be in double digit for sure, but, we don't know whether it will be 12% or 14% or 15%, but it will be somewhere around that double digit thing.
Okay, got it. I have to ask you what you're doing to combat competition, because it's real, right? I mean, not just well-entrenched players, but now there are newer players like Grasim that are entering the paint space. They hope to launch by Q4 of FY24. Will you be raising your marketing and advertising spends? Are you expecting a lot of pricing pressure? What could the way forward look like?
So it's difficult, Sonia, to actually predict. It depends on what the competition does and, how we will respond at that point of time. We have built up various scenarios for ourselves. As of now, we are focused on, delivering better value to our customers, consumers in general, our other ecosystem, dealers, painters, etc. We have to take care of that part, and we have to become more efficient there. I do not expect anything dramatic happening, but if it does, then we should be prepared, mentally, and that's what we are, working out on our own. We have built up various scenarios which are possible, and how we should be reacting under such scenarios.
Sure. The reason I'm asking is, it's also perhaps reflecting in your stock price, right? I mean, the stock in the last 1 year is down 20%, but that, of course, has nothing to do with how you run the business. It's the overarching theme of higher competition kicking in. Will you be raising your marketing and advertising spends? If yes, as a percentage of sales, how much could it go up to?
Yeah, we will be raising somewhat. We don't know exactly how much it will be, but as of now, but we will be raising some our marketing spends a little bit.
What is it at as of now? What is it at as of now?
So in terms of pure television and digital, it will be around 2.5%. So that can go up substantially, maybe about another 0.5, 0.7% increase can happen. That's something we are looking at, and then that will depend on, how it shapes up, ultimately going forward. But it is not going to impact so much, in terms of the margin as well, because I believe that the raw material prices have softened, somewhat, and we are in a position to do that.
Okay, all right. And that facility in Lucknow has been commissioned, right?
That's right. It's just been commissioned, on the 6th of Feb. So
so that's good. And you've put in 1,000 crores at peak levels. What kind of a revenue can you get out of here?
So, yes, 1,000 odd crores, 1,015 actually to be precise, which has been put in there. It increases our total capacity by almost 45 to 50% from current levels. So it's a big plant, and it can really help us in terms of, for the next 2-3 years, we are more or less covered in terms of production volumes.
Okay, all right. All the best. Thanks a lot for joining in and speaking to CNBC TV18, and all the best for the year. That's Berger Paints saying